Let me introduce today's topic. So I'm Brighton from Almost Retired in Mexico. And Kat and I, if you've heard our story, we went on a weekend vacation down to Mexico and we bought a house. It's kind of like a lot of people go and they buy timeshares and things like that, but it was a little bit of an impulsive purchase, even though we are not impulsive people. We didn't necessarily have a plan. Back when we first met, we had traveled a lot to Guatemala and other areas in Central America where housing prices were so cheap. And we're like, oh, we should buy a house down here. But then we thought, we really need to build a nest egg. We need to have an exit plan, and kind of got all serious about life. And that's how my family was. I'm a Midwesterner. And the idea was, you make money, you put it in the bank. You make money, you put it in the bank. You make money, you put it in the bank. And you don't really spend it necessarily. So that was kind of my theory on finances. So we were being pretty conservative until we just happened to buy a place in Mexico. So that might be what happened to you. That might be something that happens to you in the future, but it's better if you put in place a plan. So how are you going to pay for it so that you can kind of work towards something, maybe retire really early, just even a little bit early, but being able to retire and being able to move to Mexico. So today I've got an expert with me, and this is Victor, and he's on the screen right now. And I'm going to have him introduce himself to all of you, but he is a financial planner and really specializes in helping people in the United States move to Mexico and Spain. So this is a little bit early today because he's over in Spain. So it's the evening for him. Well, it's the middle of the afternoon for most of us. But Victor, thank you so much for being here. Why don't you introduce yourself?
Of course. Well, first of all, thank you for having me. And, it's always great just to have the opportunity to, have a little bit more of the conversation about financial planning. I think I'm a little bit of a nerd when it comes to talk about money and talk about, planning for, different changes that, might come your way. So again, my name is Victor. I grew up in Mexico City. So for those of you who, might be in Mexico City, that's actually where I'm from. And moved to the U.S. when I was 17. So my dad is actually from the U.S. and my mom is from Mexico. So I moved to the U.S. when I was 17, and that's where I studied, finance, and ended up getting a master's in business and a professional designation as a certified financial planner. And I've been working for the last 14 years in the financial services industry, but a little bit more specialized in the cross-border planning. I would say for the last 5 years, I realized there was a lot of there's a big need to understand the two sides of both U.S. and Mexico and have an expert that understand those two worlds, because they're so different. And of course, we'll talk about why they're so different. And many of you already know why they're so different. They're so beautiful, the two of them, but they're so different. And that makes it so complex. So that's just a little bit about me.
Awesome. Thank you so much for being here. And thanks to those of you who are already showing up. Feel free to start typing those questions in the comments or the chat section, and we'll be pulling those out as we go. But let's start out with kind of maybe just some basics advice for someone who is, let's say they're 50 years old, they're looking towards retirement, because that seems to be a lot of people on my channel. They're maybe in their 50s and they're like, that nest egg doesn't look quite big enough to retire, and the market's down and inflation's up and all those kind of bad things are happening right now. And so they might be thinking, hey, what about Mexico? What kind of advice would you have for someone who's in that situation?
Yeah. The first thing is, I always like to ask why Mexico. I think it's definitely a beautiful country. Of course, I might be a little biased because I am from Mexico, but I always like to ask why. And one of the reasons why I ask why is because sometimes Mexico is not the cheapest country out there, right? I mean, there is many other countries out there that people can move to. And I understand first their motivation. If their motivation is financial, to lower their expenses, we talk a little bit about their lifestyle, and we talk about maybe their expectations. Are their expectations to keep the same expenses that they have in the U.S. In Mexico and maybe elevate their lifestyle? That might be a goal. is their main goal to lower the expenses that they currently have in the U.S. and to stretch their retirement. So first of all, understanding what's behind the reason of moving to Mexico. Is it only financial? Many times we also need to understand that there might be another reason why people are moving to Mexico. Recent client of mine, he mentioned to me that his grandfather was from Mexico and he didn't speak Spanish, but he wanted to learn Spanish and he wanted to connect again with a culture that he felt very close to. So that was a very important reason. And remember, Mexico is a beautiful place, but it's very, very different to the U.S. And so sometimes we need more than one reason, right, to move to Mexico, more than just financial. But so the reason to move to Mexico is, question number one.
Okay, great. Yeah, I think you're right. There are people, I mean, there are countries further south that are less expensive. There are also, you also advise people who want to move to Spain specifically. So there are other options, and yeah, better understanding of that is a great place. So I do want to say hi to some folks right away. And if you're joining here, let me know you're here and tell us where you're from. So we have folks from LA and someone here just purchased in Todos Santos, Douglas. So congratulations. Todos Santos is a beautiful, beautiful town. And let's see here. Richard says, is it worth moving to a no state income tax state prior to moving to Mexico? Great question, Richard. And so, Victor, why don't you dig into this, like moving from one place to another in the United States before making your move?
Sure. That's actually a very common question. So a lot of people, I mean, we all live in different states in the US, right? So last 20 years I lived in California. Of course, a lot of you, living in California, New York, states that do have, income tax opposed to Texas or Florida. You might be wondering, well, what should I do when I move to Mexico? One of the things that you really need to understand is that these states that have high income tax, like California, New York, you definitely need to cut your ties to the states. There are different ways that you can cut your ties. You can look it up. I actually have a free guide on my website, but you definitely need to cut your ties, especially in California and New York. New Jersey might be also one of them. You don't necessarily need to move to another state, which is a misconception that a lot of people have. You can do something like cutting your ties in your current state and having what I call not what I call, what it is, a virtual mailbox. And that virtual mailbox you can associate it to a place like Florida, Texas. In fact, there has been laws, there has been cases that even having a virtual mailbox in a place like California is still fine. What I wouldn't do is cutting my ties and then still keeping my address with, like my friend who's in California, or my mother who is in New Jersey, or my brother who is in Pennsylvania. So, but I would say definitely cutting the ties in your current state, and then getting a virtual mailbox is usually the way to go.
Mm-hmm. Yeah, great. Well, one thing that recently came up in a conversation, which goes kind of the opposite direction here, and it was from a same-sex couple who talked about, thinking about cutting their ties to California because of the tax reasons, but also worrying about current state-by-state legalization of gay marriage might be threatened in the future. So it might be great to have the taxes of Texas, but it may not be great to have the laws of Texas. So there's also, that's something I had never thought of. I mean, I'm a straight man, so I don't have to think about that, but it's interesting that certain state laws will still apply. So why don't we talk a little bit about the going back and forth. So someone moves to Mexico. One of the things that my wife thinks is very important is the exit strategy, maintaining a spot in the United States so that you can kind of pull out. And we have a house up here, so we're still building equity in the US. So we still have those ties to the US financially, but there's a lot of people who just like get rid of everything in the US and move south. So any thoughts on the why do one versus the other?
Yeah, and and also just talking a little bit about your previous comment, I think absolutely. Sometimes a question is kind of like multi-dynamic, right? So we have to talk about taxes and also the legal aspect of everything, right? Because what you just mentioned, you're right on, right? So we're talking about now a couple who is like same sex. That's going to be a very specific type of niche planning, and even when they go to Mexico, they might need to do additional state planning. Because what if one person is in the hospital, the other person might not be able to make a decision because maybe the other country doesn't recognize their union. So when we talk about these type of things, financial planning is not only about taxes but also about the legal aspect of things in other countries and so on. So, but just just to go back on that, the exit strategy. I often advise clients, especially those that have maybe they're not of like Mexican descent, to kind of like try out Mexico. And I always tell them, kind of give it a try, maybe go for 3 months to 12 months and see how much you actually like to live there. Because I've had clients in the past that maybe they like to visit Mexico on a regular basis, but once they moved, they realized that it was just very very different, and maybe their expectation was kind of different, and it was just very different to fully move there, full time, rather than going there for like a month or two. And so a common advice that I give with clients is don't get rid of everything right away. Like give yourself at least a year, because sometimes it just takes a lot to recoup everything in the US. And you might just be able to take a look at maybe renting your place in the US for a year, and try out, if possible, Mexico for a year. Perhaps it's only 6 months, right? And so there's also other tax implications when it's only 6 months or less. You don't become a tax resident in Mexico. And so there are different ways to try things out. I think that's a good way to just see how you feel. That's just the best way. Even when you are also going to buy a place, a house in another country, in another city, even in a neighborhood, right? So you first want to see how that neighborhood feels like, and whatnot. So that will be something that I usually talk to my clients about.
Yeah. So what about the aspect like that my wife was talking about was maintaining assets in the United States as a just in case. So as a financial planner, I think you also deal with like healthcare decisions and stuff like that, kind of making the whole plan. So say you move to Mexico, everything's wonderful, but then your health turns south. The worry that we have is if we were fully invested in Mexico as the only place we had our money, like, and we had to come back to the United States for some reason. And it's like, oh boy, we need to go and pay for, expensive living expenses in the United States. Is there, kind of, you have any thoughts on that in terms of like having a nest egg that is essentially appreciating in dollars versus one that's appreciating in pesos, because that exchange rate could affect how much things are really worth when you go to try to leave the country?
Yeah, definitely. I think when we evaluate like someone's wealth, we take a look at a little bit of a holistic approach, and we see, well, let's take a look at maybe the real estate holdings. Let's take a look at their investments and maybe any other assets they have. When we talk about assets, when we talk about investments, that they may be tax free, tax defer, or taxable accounts. We try to keep all those investments actually in the US. There are reasons why we don't want to move investments to Mexico, and we want to only keep the minimal amount of money in Mexico, not only because of the exchange rate and actually how historically we've seen that the dollar and the dollar usually appreciates and the peso depreciates, but also because there are some sort of like penalties when we try to invest in Mexico, if we try to open an investment account in Mexico, opposed to just keeping assets in the US. I think also when it comes to if you have the option to have a house in the US, we always evaluate what's better. Is it better to rent that house, to keep it? Is it better to sell it and do something with that money? That's very case to case scenario. And that really just depends on how much disposable income and how many disposable assets you have. If your house is the only thing you have, and that's kind of like that bullet that you have that you are going to use to move to Mexico, well, that might not be, you might not have the possibility. But if there is a possibility that you might still leave that house in the US, you might be able to rent it out. You might be able to cash flow with the with the rent, paying the mortgage, then you're going to be able to, have that asset appreciating in the U.S. Then you have your retirement assets, and now you're generating, your assets are growing in U.S. dollars, which you're hedging against the peso. And usually, the appreciation of real estate in the U.S. can easily be calculated. It can easily be projected that a little bit easier than the appreciation in Mexico. The real estate in Mexico, it's the MLS, for example, listings and whatnot, they're not as available as they are in the US. So it's a little bit easier to kind of take a look at your net worth and your appreciation of assets in the US opposed to in Mexico.
Mm-hmm. But I suppose the same in terms of selling a house and getting your capital gains not taxed. If it is your kind of second home in the United States, you don't get the capital gains tax rate. But I'm assuming the U.S. doesn't care if you've moved to another country or if you've moved to another state. If it's a second home, it still does not qualify for a capital gains tax, homestead exemption or something like that. Do you know what I'm talking about? It's murky in my head.
Yes, so that's actually a very good point, right? So the what you're talking about is, we need to determine if it was if there's a gain, which now the real estate market has been adjusting in the last 6 months. We've seen how the houses that maybe we bought a year ago, now they're actually, unfortunately, we might be on a situation of a loss, which is not ideal. But let's just imagine that we did buy that house 3, 4, 5 years ago. Now we're evaluating, should we sell? We do have an appreciation, and we're married, and appreciation, miraculously, let's just say that it's $300,000. Let's just say that that's appreciation, right? And so here we have the possibility to say, well, we're able to use our personal exemption, which is $250,000 per spouse, which is great. But you also are able to, as I mentioned, still go to Mexico, try it out, because as long as it was your primary residence 2 years out of the last 5 years, we're still good. So we still kind of take a look to the tax returns when you file that as your primary residence and determine, was that your primary residence in 2020, 2021? Yes. Okay. Then, some for 2022, maybe we can go to Mexico. For 2023, maybe we can go to Mexico. For 2024, maybe we can go to Mexico. Then at that point, then we have to evaluate, what do we want to do? So you do get a little bit of time, but you still need to realize that the clock is running. And then there's some financial decisions that you have to make, because it's true at that point, once that clock runs out, then those capital gains the appreciation becomes capital gains. And if you're in a state like California, it's very misunderstood, but capital gains don't exist in California. There's just gains, right? So they're taxed at just at the normal tax rate in California. So it's federally they're taxed at a capital gains tax, but in California and in many states, it's just at a regular gain tax. So we're talking about quite a bit of taxes that you ended up paying. If you rented the property, of course, and also then you have something called recapture, and so it gets a little bit more complicated. But it's case by case, but you do have a little bit of time.
Yeah, that is a great point. I mean, it's what's dawning on me is that there's not a lot that's simple and can be applied to a lot of people. That you're right. Like if you're in California, your situation's very different than if you're in Texas, and if you're in a same-sex couple, or if you're single, if you're married. There's so many variables here. But let's just, I've got another question here from Douglas. So we'll see a specific question about South Dakota for tax reprieve. South Dakota is where a lot of us register our cars, and they make it super easy for those of us who live in the Baja Peninsula. It's we don't have to pay the tip and things like that. But what about changing your address to there?
And will the purpose of this be to do what exactly?
Yeah, I think I'm gonna guess, Douglas, you can type in, but it's maybe to reduce taxes. Say they're coming from a tax with state income tax.
Yeah. Yeah, as I mentioned, I mean, the we can always move our, as long as we close, as long as we cut our ties in the states that we're in, we can really choose any other state, because legally we're not required to pay taxes in a state that we're not living in. So you just need to ensure that you cut your ties properly. But there's a big list, right? Even sometimes. Belonging to a religious organization in your state might trigger that. Sometimes I still keeping the driver's license, and that's a big one. So I had a client at some point in Mexico, and he wanted to keep his driver's license just because it was from New York, and he really, 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 really liked New York, and that was very sentimental. And so he wanted to keep his driver's license, and my advice was, you do need to cut your ties, because that's just not it's not worth just keeping the plastic just because of the sentimental value. So we definitely need to make sure we cut our ties, and then we can choose any other state as our tax home, because we're not going to be filing taxes there, right? We have nothing to do with other states. We'll get our mail there, but we will not file taxes unless that we are producing any income in that state. So that's the rule if you have any rental property. But unless you're producing income in that state, we're not going to be even filing taxes there.
Great. Thank you so much for that.
Hopefully that answers that question.
Yeah, I think so. And Douglas, feel free to type in another question if we were off course there. And anyone else, definitely hop in with questions. I do want to take that quick. Usually we take a break for happy hour, but it's a little bit too early here in Oregon. So I do have some hot chocolate with me today because it's cold in Oregon today. It's like 40 degrees or something. We're up to 46. So it's cold and rainy. I am so ready to move to Mexico. We aren't going. I'll be going in the middle of November. So I'm getting close, but not quite there. So if you are having a beverage, whatever it should be today, if it's 5 o'clock in your place, or if it's, I think, 9 or 10 where Victor is, let's just do a little cheers. How about with whatever that beverage should be? Great. So Douglas did talk about cutting ties. That's what his question was about. So perfect. Let me hide that one. And one of the things I saw on your website was we have the practicing expats are drinking coffee right now. So that's great. Keep you going throughout the afternoon. Anyone else hop in there and let us know what you are drinking for our happy hour today. But there's something called the FIRE movement. And I really don't know much about it, but I did see it on your website. And I guess maybe you could tell all of us a little bit about what the FIRE movement is. I'm not sure. Other people let me know too if you've heard of the FIRE movement or if you really understand it. But Victor, hopefully you understand it and could tell us about it.
Yeah, I think a lot of people will take it a little bit differently, but it's about retiring early on your own terms, right? And that doesn't really mean that doesn't really mean stop working, but it's more like having the possibility to stop working. So it's more like attaining financial independence, right? Like I think the FIRE movement, it's a lot about aiming or attaining financial independence and just getting to that point. And there are just different ways that that's been done. There are people who attain that by working at high-paying jobs and investing in the stock market. There are people who attain that with cash flow. But pretty much the main idea is that as early as you can, that might be in your mid-30s, that might be in your mid-40s, that might be in your mid-50s, right? So that's still earlier than the usual 62, 65, even 67. We are able to say, well, maybe I don't want to work full time anymore. And oftentimes what happens is that these people tend to still go back and do something. They don't stop working completely because let's be real. A lot of these people who are able to retire early are also kind of overachievers, right? I mean, they have a goal, they're working very hard towards it, and they're super overachievers. So usually these type of people will realize like in a year, 2, 3 years that they're kind of bored and they ended up doing something. What I've found with my clients is that they ended up maybe, doing some sort of like part-time consulting, volunteering. They ended up doing something, but it's pretty much replacing that income from your job and how, and just finding creative ways to replace that income. I can mainly talk about two things. One of them is it's real estate, and the other one is just investment income slash growth dividends from investments, and the different three accounts that we have, before tax, after tax, and tax free accounts, and being able to smartly navigate that, and on top of it, not spending a lot of money, which is where a place like Mexico, it fits very, very well, right? Because something we all love about Mexico, besides of the food, is the cost of living, right? And so that's a little bit about the fire movement.
Fire movement. Yeah. Yeah. It seems like a lot of younger people seem to talk about it as the fire movement, and maybe people who are in their late 50s, early 60s are like, I just want to retire now. And they don't necessarily use the same words. So yeah, one of the things we talked about before when we first met was estate planning, and how that might be different. Say you pass away in Mexico, but your will is in the United States, and things like that. Those are things I'd never even thought about. But maybe you can tell us a little bit about what you need to think about in terms of those kind of estate plans or passing away overseas.
Yeah. Well, first thing is, I'm not an attorney in Mexico or in the US, right? So very, very important. So I always mention these to clients. But I always like to explain to clients a couple of different things about the US legal system and the Mexican legal system. Pretty much understand they're very, very different, right? I mean, it's day and night. US is coming from common law. US is coming from Mexico is coming from civil law. So first of all, we need to understand that we are going to a country that is completely different to the legal system that you know and you understand. If you are used to the precedents, that's how the ruling is, and that's how we get the ruling. Well, in Mexico, in civil law, it's very different. It's almost like the Constitution is written in a way that it's very, very thick, and they almost thought of every single possible situation, and they sort of like have a penalty or a solution for every single situation. So you can tell it's kind of rigid, and it's very, very different. So what happens is that now we have two different legal systems, and we have a country that is very, very developed, like the US, where we use a lot of trust and a lot of wills. And in states like California and states like New York, we use a lot of living trust. So also in Oregon, right? So in a lot of states in the US, we use a lot of revocable trust. Irrevocable trusts, they're a little bit different. We use them a little bit less often. And then we also have grantor trust, and we also have other different trusts. And then we have forever wills, and whatnot. Wills do not travel well to Mexico. You might travel well to Mexico, but your will doesn't always travel that well. And so what do I mean by that? Although Mexico, it's part of the convention that certifies wills, that they recognize your will that was drafted in the US. So they might recognize that. But because it's almost like the legal system, sometimes it's like two different Legos, and we're trying, like puzzles, we're trying to put them together, but they're not quite, they don't quite fit. That's how sometimes legal documents, work in these two countries. So the advice, and usually what I talk to people is, when you are really planning, when you're really committed about like moving to Mexico, you have to have a legal strategy. You have to have a strategy on how to, what will happen, an estate plan of what will happen if when you pass away, right, in Mexico. And so we have to take a look at if you have real estate, we have to take a look if you have any other banking accounts, and how that complements with your plan in the US. Because in the US, if we talk about inheritance tax and all these different type of taxes, we don't really get to those type of taxes until our state is over like 11.5 $3 or $6 million, right? So not a lot of people get to that point. Not a lot of my clients even get to that point, so I don't even have to deal with that. But Mexico is different, right? So you might get to a tax situation much quicker, and this is also very dependent on states. So Jalisco, which is where a lot of expats live, right, because of Puerto Vallarta and Ajijic, and Mexico City, they're two states that are very different, right? And they're also going to be very different to Baja California. And so we have to just be aware of the legal system of our state in Mexico and how that puzzle kind of fits with our state plan in the US, and just to ensure that it's all connected. Because what we don't want to is to think that we have all taken care of, and then actually all the sort of keys that we had for our state plan, all of a sudden they're not working and they're not opening the door. So definitely there is, as I mentioned with the same-sex couple, that is an example of not the same legal like protections, for example. Although I think I just heard that in Mexico it just became legal same-sex marriage, I think a few days ago. But that's just an example of like, it's by state. You have to really take a look at the plan, look at the details, and the distributions also. This is something different, but from retirement accounts and taxes, how they count in Mexico, it's completely different. So in Mexico, again, everything is completely different, beginning by the law and everything, right? I mean, we love it, right? But that is completely different.
Yes, yeah, it could be a good thing or a bad thing. So, yeah, let me see here. So I guess your firm, looking at your website, sounds like you have partners maybe that are in like work in the world of expat tax and the world of expat law, or yeah, tell me about the structure of your firm and how you help people.
Yeah, so we definitely specialize in working with Americans who move to Mexico and who move to Spain. So for purposes of this, most people obviously they're moving to Mexico. So we have partnered with equivalent CPAs in Mexico that and attorneys in Mexico that help us navigate the complexities of our financial plan. So we always take a look at the financial plan, and we create a financial plan from the U.S. perspective. We just like your financial planner in the U.S., we will create a financial plan. We understand, first of all, what are the blind spots that expats have. But before I never print them out, but before I print out the plan, I say, well, I am not an expert in like Mexican law and like tax law, like to the point that I know for sure everything, because things change, right? Even in the US, like sometimes things can change in a matter of, in a year, they can change twice. Like here, for example, in the US, what I do, I'm a financial planner, but I have my American CPA who is taking care of everything that has to do with taxes. So although I'm a tax expert, I have someone who is taking care of this, because I strategize the plan. So I do sort of like the quarterback of strategizing the plan as a whole, but I have these other people who are experts in their little field. And so that's what we do. So I strategize it, I create a plan, and then I say, well, let's make sure this is like foolproof. Let's see first in the US, I say, yes, it's fine. Let me check here in Mexico. And they're like, well, this might not work well. And so then we go back, we change it, then we present it, and that's how we do it. Yeah.
Okay. Great. So Practicing Expats asks about Canadians. And this is something that always comes up on my live events, because I'm usually catering to the American audience when I'm talking with an expert. But yeah, how does, are you able to help Canadians, or are there laws that say you have to be licensed in different countries, or?
Yeah, that's a great question. We're able to help Canadians who live in the US, but they have to have a relationship to the US, but no Canadians living in Mexico, because then we have no relationship, right? There is just no anchor, because we're not based in Mexico and we're not based in Canada, and we don't have, so they have to have a relationship to the US. And so they're they're probably there also needs to be a very good like advisor that understands their country, because they also have very specific accounts similar to the 529s and the Roth IRAs and retirement accounts. They have very equivalent plans in Canada. It's also a very complex country. Like the US is very complex. Canada, US, Australia, UK, all these Anglo country, they're very, very complex. And so the planning needs to be, needs to be under, like the advisor needs to understand this country very well. And then they also need to understand Mexico. The good thing is there's a lot of Canadians in Mexico and they love it. So I'm sure, there is a financial planner out there who's doing the same thing I'm doing, but with Canadians. But no, we just specialize in Americans.
Okay, great. Yep. Sorry, Canadians. We need to find those people. We need to create a list of all the people, the equivalent in Canada for healthcare is another big one with leaving Canada and going down to Mexico. It's very different from leaving the United States. So, yeah. Well, another thing about your practice specifically is, and maybe this is just kind of about using a financial planner in general, is at what point does the need for a financial planner kick in? Say maybe you're renting a house or you're renting an apartment in the United States and you're a digital nomad and you're going to rent a house in Querétaro for 6 months or something like that, versus you own 3 houses in the United States and you're, living in 12 different countries. Where's that break point where someone's like, I really should be talking to someone versus just freelancing this?
Right. No, that's a great question, and it's very fair because first of all, financial planners, we're gonna cost some money, right? I mean, it's
Mhm.
not we're not the cheapest professionals out there, so there's definitely a break even point, or a little bit something like that, and this is how I usually see it. I usually give a free consultation to just anyone that wants to talk to me for about half an hour, and they have that need that they need to, they're doing this, and I'll tell them, well, I think you're a good. We call it the fit meeting, call, and maybe we're a good fit, maybe we're not a good fit. If we're not a good fit, I'll kind of tell you, what you should do. But I will say, it doesn't matter. It doesn't matter the age. That you can be young or you can be older, but the point that I think this is going above your head, that you think like, okay, well, I've been doing my taxes for a while, I've been doing my planning for a while, and this has been fine. But now this is just getting more complicated because I'm moving to Mexico. And so every time you move to another country, that is going to be already one complexity. But another complexity is what we call a life event. So moving to another country, getting divorced, getting married, having a child, paying for someone's for your child's wedding, things like that are life events that just keep adding complexity to the planning. And so when we move to Mexico, that's already a life event. And retirement, it's another big life event. So when we have these two together or they're near each other, at least you should have a review. Why? Retirement is going to be the biggest complexity about retirement is going to be the distribution, the retirement distribution. Okay, I've been adding money all my life to retire. Great. So as Brighton said, right? So my parents said, to put money away, and so I've been putting money away. I have money. Great. I don't know how much money I've been. I don't know if it's the right amount. That's the first question. Is it right amount? I don't know. But am I ready to retire? Well, I don't know. But that I can tell you. But the other question is how much am I going to withdraw, and what pays? How am I going to invest it now that I'm retired? These are the type of questions I think that are important that we definitely need to get a little bit more. Those are type of conversations that we need to talk to a planner. I think that withdrawal strategy, just to ensure that this is the right time, and that we're doing it the right way, because if we don't do it the right way, then we're going to be overpaying taxes. Mexico is not a cheap country for taxes. We're talking about kind of like a lot of the questions is like, well, how do I get rid of not living in California, or not living in New Jersey, or not living here and there? In Mexico, you're going to be paying in the 20% taxes, right? So you're going to be paying 22, 24, 25. It depends if you have a little company or not, but you're going to be paying some taxes. And so the federal tax rate in the U.S. Of 22%, I mean, already belongs to people making, a certain amount of money, quite a bit of money, but some people can pay as little as 12%. So what I'm saying is, if you lived in a state like Texas or Florida, making very little income, you might even pay less taxes than in Mexico. So so we do need to plan some smart strategy to ensure that what you're doing is you're doing the best for yourself, right? That you're doing this a smart move, and you're doing it right.
Yeah, so Mexican taxes. So we live in Mexico for about 5 months a year. So we aren't, we're not residents for tax purposes. We're permanent residents for immigration purposes, I think is what the scoop is. So say someone does, relocate to Mexico and they start drawing on their pension and their 401k, and are they to start filing taxes in Mexico? And maybe just give us a maybe Mexican tax 101. Do states have income tax in Mexico just like they have in the United States, or is it all federal? It's something I don't really even know about.
Yeah,
And
that's a
I'm
great
not sure how
question.
much people follow the rules.
Yeah, that's a great question. I mean, and that's a very common question. So I'll address it how often people follow the rules. In the past, not very often, because it's like, well, how is the Mexican government gonna know, right? I think there's even a TikTok. How are they gonna know, right? And it just goes like that. And then there's just a lot of different things that people say. It's like it's trending. How are they gonna know? Well, they've been investing. They've been investing in artificial intelligence. The president that's been around, Manuel Andres Lopez Obrador, he has been very, I would say, strict when it comes to ensuring that what he thinks rich foreigners or foreigners, they need to pay their first share. They About 3 years ago in June, taxes started changing. So companies like drivers of Uber, for example, they were not quite needing to pay taxes. It was just very gray area, and they started to pay taxes. The same with people with Airbnbs. Tell you that because I had an Airbnb in Puerto Vallarta, so I had to. That was a big inconvenience. I was like, no. Have to pay taxes now in Mexico. I mean, and it was at the end. It was I paid them in Mexico, and it was almost the same as in the U.S. But the and because I'm an accountant, I knew what to do, but I'm just like, this is just so much work.
Yeah.
And so the first also, but are they enforcing it? Yes, they are enforcing it more and more. What can happen? I mean, the consequences are that they depending on which taxes you are not paying, but they you don't want to kind of owe to the SAT, which is the equivalent to the IRS. That's an agency that it's just that, like the IRS, like maybe you won't get caught, but none of us want to get caught, right? So we just rather kind of do it the right way. So we're all trying to do it the right way. Because again, in the last 3 years, they've been really trying to, step up, and they just keep, and they'll keep on doing it because Mexico is becoming more and more developed, and so it's a trend that happens in any country that becomes more and more developed. It's just a trend that we see. Their taxation system, their Congress, everything gets a little bit more together. They gets a little bit more strict, and they're able to apply things. This is overall in the future a good thing because the country should also progress. The roads should be better, the security should be better, so eventually things should be better. But in short, I think yes, we always say we always try to we always do the right way, the right way. Now taxes 101, states no, states don't have a tax per state. Some depending on what you do, like for example, depending on your activity, but if you're for the most part, there is no taxes like we have in the state. There is just the federal tax. So again, depends a little bit on your activity. If you're a company or you're a freelancer, well, that depends. You might be subject to other special different taxes in Mexico. But for just pensions, retirement things, and I think the audience here is the you said 50 and over. I'll talk a little bit more about that. There are different tax treaties, so not everything is taxable in Mexico. For example, Social Security is always taxed in the U.S. Also, some other pensions. The word pension, it's a little bit It depends, right? Because it's nothing. There's nothing clear. As I mentioned with the Legos, we have to take a look and see. Okay, well, where is this pension coming? Is this coming from the VA, or is this coming? Or are you a veteran or a school teacher? Is this a private, a public, or a government pension? All that makes a difference, right? All that makes a difference because in the tax code it's written. Okay, well, these are taxed in the U.S. and these the other country where your it's called where your financial gravity life occurs, it gets to tax it. So it really depends on what income. Then we move into the retirement accounts. For example, a 401k, an IRA. We move into this type of accounts, and so we they're taxed differently than in the U.S. For example, the distribution in a Roth IRA in the U.S. is tax free, whereas in Mexico, it's not going to be 100% tax free. But we every distribution we have to report in both countries. We're reporting in the U.S., we're reporting in Mexico. We pay taxes in one place. We're able to get a credit back in the other country. But again, not even all credits are fit. You're able to, if you pay a tax in Mexico, you're not always able to get a credit back in the U.S. So again, this is very, very, very specific, just because every individual account has it's almost in the tax code, it has a different treaty. But just as general, yes, it's taxable, and it should be paid in the right country.
Okay, yeah. This is kind of like blowing my mind here as I'm thinking about how complicated it gets when you start to live in Mexico more than the United States. Because right now we only pay taxes to the United States, and our taxes are a little bit more complicated because we have to file an FBAR and stuff like that. So our tax, we've gotten a little more complicated, but it seems like once you cross over and owe taxes in Mexico, there's one thing that I've heard all this about is the foreign earned income tax credit of up to $110,000. But it seems like if you go and you earn that, you go to Mexico and you earn that $110,000, you have to pay the Mexican tax rate of 25% or something. So it's maybe not that great. And then you would get that money off of your taxes in the United States anyway. So is that maybe not as good of a deal as it sounds, or is it, maybe am I missing something?
Yeah, no, this is a great point. I mean, it works for some countries very well. Think of a nurse working in Dubai, making $200,000. She's not paying any money in Dubai, and also she doesn't have to pay $180,000 in the U.S. It works wonderfully for her, right? She only pays like $20,000 in taxes. But it's because the Emirates don't tax her income. I have some clients. They work for either World Bank or the United Nations, and the World Bank or the United Nations actually pays their taxes. So in that country, so they get like a tax credit, and so no problem, right? So they're happy, and then they also use the foreign the foreign exclusion amount, and we're all good. But in for most people, not most people, the majority of people, they will not take advantage of that because other countries will have some sort of tax. And that, again, some countries don't have a very high tax. But at the end of the day, right now, we think in the U.S. our tax system is super high, but the federal taxes in the U.S. are not super high. Economists do think they will get higher because our national debt is quite high. Now we're getting very close to our GDP. We're actually about 130% of our GDP. So it is quite high. So we do think they will get higher. We're still not very, but they're not very high. So other countries, we usually will have, higher taxes. And so our system is progressive, where it goes from, 0 to 12 to 22 to 25 and so on. And other countries, sometimes it's flat, progressive. But yeah, so that means in Mexico, you will pay that. And remember, if you're self-employed, then you also pay the self-employed tax. For example, let's say you move to Mexico, then you pay the Mexican tax on certain income, and then you pay also the self-employed tax in the U.S. because you also want to get Social Security in the U.S. And then depending on how your company, right? If you have a C corp, maybe it's different, but if you have an LLC, it's different, and then if you have a sole proprietor, it's different. So it gets more complex for these people, like yourself and myself, who are doing business in another country, right? Because right now I'm sitting in Barcelona. So it gets complicated for us.
Yes, definitely. So you've got multiple spots where you're dealing with that. Okay, so we do have a question here from Richard. As a retiree, I understand that I have to file U.S. taxes. Yes. Do I have to file Mexican taxes as well if my income is all from the U.S.? And let's just say that Richard is living full time in Mexico and not having any other income from Mexico.
Yeah. So it depends what type of income. As I mentioned, if it's a Social Security income, no. If it's uh, if it's not Mexican source income and you're not a Mexican citizen, there's also the citizenship factor where sometimes if you are a Mexican citizen or if you become a permanent resident and a citizen, that can also determine your whether you're more likely to pay taxes in one country or another. But it depends a little bit on the type of income. So if it's Social Security only, no. If it's some retirement accounts, then yes, some are paying in Mexico, some no. If it's income from like rental income, we'll have to take a look at how your company is structured. If it's let's say if it's a C corp, maybe not, because a C corp it's just keeping everything in. You're already paying taxes in Mexico, in the U.S. But if it's a sole prop, then yes. So it just depends.
Great. Thank you for that question, Richard. And that's interesting. I never, my business is a sole proprietor and just goes through on my 1041, but theoretically, that, changing the business structure in the United States, if I was living in Mexico, could be advantageous or not so. So decisions that you might make based on US taxes might change when you start to pay Mexican taxes. So,
Absolutely, absolutely. I mean, you might want to take a look at, well, having a C corp makes sense for me, and so everything really depends on. And this is very common because I do have a lot of clients who are, middle age. They retire early. They're in their mid 40s, and then they said, I'm done working. But then they say, well, I can be a consultant. I can actually make some good money being a consultant. And so they moved to another country, Mexico or Spain. And so sometimes we do ended up opening a specific business structure in the U.S. So they only take certain amount of money as payment in Mexico, and so that's what gets taxed, what gets out of that company. And so there's different strategies, but all depends on the income, all depends on all these different things, and sometimes it makes sense, sometimes it doesn't make sense.
yeah, it seems like there are a lot of machinations here, I guess, a lot of different things. Okay, so we are going to boot someone from the, damn it. Hopefully we just blocked Grandma 4. Sorry about that, guys. So that's the first time I've had someone do spam in the chat, and I guess I wasn't quite ready for it. But yeah, so feel free, folks, to keep asking questions. We've got Victor for a few more minutes before it's really bedtime over in Barcelona. But yeah, maybe you could tell us a little bit how folks could get in touch with you, and yeah, and what kind of services you offer.
Yeah, we're a wealth management company that also files taxes. So the main thing that we do is financial planning, and so we specialize. We work with people. Yeah, that's our website right there. We work with people usually whose portfolio it's about $500,000 or more, and I'm a certified financial planner, but I'm also a fee only. What that means is that I don't charge a fee based on your amount of assets. I charge an annual fee based on the complexity of your situation. And what I do is that I file your taxes in Mexico, I file your taxes in the US, I give like tax planning advice, I manage your assets. So I do a lot of different things. So there's a lot of things that we do, and that's my website. You write us an email, schedule an appointment. The first one is it's very easy, and it's free, just to get that fit call and see where we get fit for each other. And if we're not, I also know a lot of people that I work with that that I can refer to. If for some reason we're not a good fit.
Great. Thank you for that. I'm going to check out our comments here, see if we've got any good stuff coming in. But yeah, well, actually, something that I'm just interested in here that doesn't have to do with the finance, but does have to do with that like planning aspect. Because a lot of the things in the United States, we have kind of medical plans for when you're getting towards the end of life. Like we have do
Yeah.
not resuscitate and medical power of attorney. And, there's a lot of people who are getting older in Mexico who are from the United States who are going to Mexico and probably plan on dying there. Anything else that we should be thinking about there, or anything else that's kind of like equivalent in Mexico to these things that we are used to in the United States?
Yeah. So absolutely, and that's part of your estate planning, right? So, and you're referring to the directive. So,
Mhm.
either financial power of attorney, health directive, and so that's all the package that comes with the will. And so, we want also per state, we also want something equivalent in the state that you live in Mexico, and talk to a local attorney. And we want to ensure that that is taken care of in advance. That those type of documents. But yeah, and that will be done by a local attorney. But yeah, that's something I highly encourage. Rarely, not a lot of people do it, but it's always it's better to have it and not need it, or need it and much later, right? Than not having and needing it. And again, these documents don't tend to be that expensive in the U.S. Usually, these documents can cost anything from $3,000-4,000. In Mexico, there you can get a full financial, like the state planning for maybe 1,000, $1,500 or less.
Mhm.
So the prices are definitely half or less.
Mhm. Wonderful. Well, that's good to know. So thank you, Richard, for the super sticker. For those that don't know, that is a donation, which will go to my margarita fund. So thank you so much. And also Pammy, another regular on my channel, says, "Do we need healthcare directives in the United States and Mexico?" I'm not sure if she heard that whole answer there, but um, yeah, like for Mexico, do they are like the hospitals used to directives, I guess. And does your
No,
US directive apply in Mexico?
yeah, yeah, that's a great point. That First of all, I'm not an expert in this in Mexico when it comes to hospitals. So I this is just in my experience what I think. I do not think they're used to this, right? This is also very advanced. I mean, even in some states in the U.S., this is something that we don't use all the time. I mean, we use them in maybe the East and the West Coast, but not everywhere.
Mhm.
I mean, we highly recommend them to have them. Are they going to be used to? No, this is something that you want to in advance, have and maybe even provide to your primary care doctor, and maybe talk to them about having it and how to get it into their system at a
Mhm.
hospital nearby, because I do not believe they're going to be used to these type of documents.
Yeah, actually, this is going to be great. I think this is another topic that I should be looking into here because it's definitely something, as people get older, they start, you know, getting these documents in place in the United States. And so, also Pammy is asking if do we need it in both places? And it sounds like it's best
Yeah.
in both places, but as to whether, I mean, for instance, if I have a directive here in Oregon and I'm, end up in a car crash in Alabama, it might be different. So as to whether or not they follow what I was asking for. So yeah, I'm going to be looking into that a little more and seeing if we can bring on an expert specifically about kind of legal healthcare stuff. So yeah, I think those are the questions that are in the chat at this point. I want to thank everyone for being here. And I want to thank you, Victor, for hanging out late night in Barcelona with us here across Mexico and the United States. And yeah, any last words for our folks?
Buena suerte, que disfruten mucho México y que coman unos tacos muy ricos. So have a wonderful rest of the day.